Wh- What's up, everyone? Elvis Justice here again. So we are going to continue with the series. Today we are going to be doing the Forex introductory course. We are going to talk about what is traded on Forex, what is Forex broker, the times, the sessions that Forex is traded. We're also going to be talking about forms of trading, terminologies used on trading, what are currency pairs, and we are going to do an overview of the MT4, right? So without much ado, let's quickly go straight to do it right now. When we talk about Forex, when we say Forex, right, this is Forex. Forex basically means Forex exchange, right? So I always say this, that Forex means foreign exchange. We are exchanging something, um, foreign exchange, right? Foreign exchange. So for means foreign and X means exchange, right? I think that makes sense. Now, people do ask me always, what is why I always say this, that you can make any kind of money on the market because there's always 5.3 trillion, roughly or averagely 5.3 trillion dollars in the Forex industry. This is liquidity provided in the market daily. Now, how do we know that we have 5.3 trillion dollars in the market? Now, people are buying, people are selling. Someone has deposited 100K, someone has deposited 1 million, someone has deposited $2 million, someone has deposited $10, someone has deposited 50 dollars whatsoever. Someone is buying, someone is selling. So if the person loses, the money comes to you. If the person also gains, the money that you lost or some other person lost comes to you. I don't know if that makes sense. So it's basically people putting money in there, and we have a liquidity 5.3 trillion dollars. So whoever loses comes to you, whoever gains means that the person is also making money from someone that also loses. There's definitely going to be people buying and selling something. So if, let's say, 100 people are buying and 100 people buying sums up to, let's say, 1 trillion, or let's say someone is also selling and sellers are also summing up to 1.3 trillion, definitely there's going to be a loss, either a loss of 1 trillion or a win of 1 trillion. And those that lost here are going to be paying for these people, and those that won here are also going to be paying for these people. I don't know if that really makes sense. Now, what is traded on Forex? Let's talk about stuff that are traded on Forex. Now, Forex is so big that, we can trade Forex pairs, example, euro, we can trade US, we trade currencies on the market, like currencies of countries. So euro is spent by Germany, USD is spent by USA. We can trade pairs like NZD, that's the currency for New Zealand. We can also trade GBP, or we trade GBP, that is from UK, right? So these are countries, any countries that you can think of. ZAR is traded by what, or is spent by what? South African. So we do trade those kind of pairs. Now, aside the currency pairs like Ghana, Ghana, we cedis, we can also trade cedis here. Now, that aside currency pairs, right, or aside money spent by or money is used by currencies used by countries, we can also trade oil, that's commodities. We can also trade stocks, that's like US 30 indexes and all those things. I'm going to talk about them, but for now, let's just focus on currencies, right? Let's now focus on currencies. Now, what is a Forex broker? People have been asking me this. What is a Forex broker? Now, a broker simply provides traders access to the financial market. They provide a trader with a trading account. So what a broker does is it gives you access to the market, right? It's just like any business, just like an example I always use, like betting, right? If you're going to use, let's say, 1xbet, when you deposit your money to 1xbet, you are trying to make money or you're trying to lose money. So If you are making money, 1xbet pays you. If you're losing money, you lose money to what? 1xbet. That's the same thing with broker. For brokers, if you lose money, the money goes to the broker. If you make money, broker pays you. So that is, that is basically what a broker means. An example of broker that I always use is Eagle FX, Global GT. There are other brokers that you guys, know. Example, Hot Forex. There's Hot Forex. There's Late Forex. There is XNES and all these things, right? They sums up to what? Or they sums up to brokers. So brokers is basically, it's a firm that provides you access to the financial market. If you make money, they pay you. If you lose money, you lose money to the broker. So you always have to, or you always want to get a good broker. I'm going to talk about commissions. I'm going to talk about a lot of things that you would need to also find a good broker, and why I do use this to brokers. I'm going to talk about it in the subsequent videos. Now let's talk about trading time. Let's talk about trading time or trading sessions, right? Let's talk about trading times, trading sessions. Now for trading time, we have the three main sessions in the Forex market. There are a lot of sessions in the Forex market, but we're just going to be talking about the three main ones that every trader needs to know, or everyone who wants to trade needs to know. We have the first one, the Asian session, right? The Asian session. We have the London session, and we have the New York session, right? Asian session, you can call it the Tokyo session, right? London session, you can call it the European session. And the reason why we say European session is because most European countries do open at this time. Example, Frankfurt, New Zealand, maybe even Moscow, other countries, they mostly open their session during this time. That is when a lot of people wake up, or banks are open, right? New York session also the US session, right, also opens at a specific time, and I'm going to explain to you. So these are the three main sessions that every trader needs to know. Now, Tokyo sessions always open 11 p.m. GMT. You may as well want to do that or convert it to your time frame. You may be living in USA, you may be living in Ghana, you may be living in wherever. You need to I'm using the GMT, that's a green meridian time. You can convert that to your time to suit in and trade. Now we have the London session too. The London session also opens every 7 a.m. GMT, right? It opens every 7 a.m. GMT. That is to tell you that most London pairs or most European pairs are going to be volatile during this period. And we have the New York session, which opens every 1 p.m. GMT. Now, the reason why there's differences in these sessions is because when you go to Tokyo, this 11 p.m. GMT is a time that is going to be morning in Asian, right, in Tokyo, and this is the time that banks are opening or people are waking up to work. It's just like waking up 8 a.m., 9 a.m. That is the appropriate time that banks do open. And when banks open, that means the session has opened. There's inflow of cash, there's outflow of cash, there's liquidity in the market, there's liquidity in the financial space. People are withdrawing money, people are depositing, there's work, the economy is running. So this is a time that you can, have, if you want to trade Asian pairs like JPY and all those things, this is the time, to catch those moves. Right now for London session, it's open 7 a.m. GMT, and for the New York session also opens 1 p.m. GMT. So if you are going to trade pairs with USD in them, USD pairs, that means is likely you trade them 1 p.m. GMT, because we are going to have volatility during this period of time. I don't know if that makes sense. Now, someone would also ask always, what is this, if this is the starting time of the session, when does the session close? The session normally closes after 8 to 12 hours, right? So once it's open 11 p.m., it closes after 8 to 12 hours. Just like, you know, people waking up 8 a.m. to work, they are likely to close work 5 p.m., 6 p.m., 7 p.m., 8 p.m. That means the session has closed. So if on London session, if you're going to trade pairs like GBP, euro, and all those things, right? If you're going to trade pairs, this is the right time to trade such pairs, right? And more, like I said, the closing period is after 8 hours. So that means the session is going to be running for 8 to 12 hours. So you can just do the math plus 8 and know that you are going to finish this session 3 p.m., right? Now, if you're going to trade USD sessions or USD pairs, that is my favorite kind of session because I love trading USD pairs. I'm going to tell you the reason why I do love trading USD pairs and subsequent videos, but now just know that it also takes 8 to 12 hours, or 8 to 12 hours always. So you can just do the calculation, 1 plus 8. You just know that 8 p.m. you are closing your session and you're going to be ready for the next session, that is the Asian session. I don't know if that makes sense, right? I don't know if that makes sense. Now let's talk about terminologies used in Forex. Terminologies used in Forex. Terminologies, right? Terminologies used in Forex. Now, this is terminologies used in Forex. Now, we have just few terminologies that we're going to use in Forex. The first one is long, right? When I say long, it also means I'm telling you to buy something, or I'm telling you that something is going to be bullish. Are you following, right? And when I tell you something is short, right, that means I'm telling you that you need to sell something, or something is bearish, right? So if I tell you that GBP is long, that means I'm telling you to buy GBP, or I'm telling you that GBP is what going to go to the upside. If I'm telling you short GBP, that means I'm telling you that GBP is going to sell, or GBP is also bearish, right? I don't know if that makes sense to you, right? Now, there's another terminology that we use as ranging, right? Now, when I say ranging, that means market is sideways, right? Sideways, or we are going to see market going up or market going down. Mostly during ranges, we have this kind of moves. During longs, we have price moving this side. And when we say short, we have price moving that side. So whenever I say ranging or sideways, that means market is going, you know, in an upside or a downside, or it has no direction basically. So doing ranging market, what you should note is we do not do anything in the market. We do not trade, right? Because there's no direction. There's no clear direction. Now, we are here to make money, right? If you don't see anything like the direction is saying that the direction is bullish or the direction is bearish, that means the direction is sideways. And if the direction is sideways, that means we are not doing anything. So take note of this. We don't trade in a ranging market, right? We don't trade in a ranging market. We rather trade in a trending market. That brings us to the next terminology, trending market. Now, trending market is when market is having series of higher highs, higher lows. When I say higher highs, higher lows, that means price is moving to the upside, goes down, goes up, goes down. But you can see that the direction is so clear to tell you that market is what? Going up. When we say market is trending to the downside, that means we are saying market is having a series of lower highs, lower lows, lower highs, lower lows, lower highs. And you can see that the direction is what? Moving to the downside. So we have two types of trends. We have the uptrend, right? Uptrend, and the downtrend, right? That's the the downtrend, uptrend, and the downtrend. Now let's talk about, these are technical terminologies. Now let's talk about fundamental terminologies, right? We have the hawkish, right? We have the hawkish, and there is the dovish, right? These are terminologies that you must be obsessed with, because we are going to be using these terminologies a lot in this industry. So when I tell you that long Bitcoin, that means I'm telling you that buy Bitcoin, basically. Now, when we say hawkish basically means that there's a good news, right? It means that there's a good news, or there is a positive news. This is fundamentals. That means there's a plus. And when we say dovish, that means there's a bad news and there is what, a minus. So whenever there's a plus news, or there's a positive news, or there's a good news, markets tends to what, go up, or the interest rate, or what so have you, or whatever news you are trading, there's going to be an increase or a bullish structure formed on that. And whenever we say dovish, that means there's going to be what, a decrease, or a market moving to the downside. So this is basically known as bad news, right? So let's just make a quick example. Let's say the current president of Ghana dies. What does that mean? That means that it's a bad news. So that means the economy of that country would push down a bit. And that means if you're going to trade CDs at that period of time, that means there's going to be likelihood of CDs falling, or likelihood of whatever pair you are going to trade to go down at that period of time. There are a lot of fundamentals, fundamental terminologies that we can use: CPI, FOMC, what have you. But let's talk about NFP, right? In the subsequent course, or in the subsequent videos, I'm going to talk about fundamentals, how to trade all these interest rates, core news, core fundamentals, and minor fund. That's the major, minor. We are going to talk about how to trade the major fundamentals, and we're also going to talk about how to trade the minor fundamentals. Now let's talk about NFP. NFP means non-farm payroll, right? Non-farm payroll. Now, when we talk about non-farm payroll, it's basically a news event that comes to the USA market. Now, every pair has a CPI, every pair has an FOMC, every pair has its governor coming to talk about, the pair and the economy of that country. But for NFP, it's basically strictly associated to what? The USA. That means you're going to trade this during the New York session. And we do trade the NFP every first Friday of every month, strictly every first Friday of every month, every first Friday of every month. So every first Friday, there's going to be an NFP news. And this news is basically telling us how many jobs the US economy has done in the past year. So let me break it down. When we say NFP, let's say we are currently in December, right? Just an example, let's say we are currently in December. A month before December was November, right? A month before December was November. Now, if November USA did 200K jobs, right? And in December, USA did 160K job. That means there's been a decrease in the number of jobs that they've done. That means the news is what? Dovish, right? And we are going to be looking for what? Selling opportunities. The news is bad. But when, let's say, November is 150K jobs, they did 150K jobs, and December they did 200K jobs. That means there's been what? An increase in what? In the jobs that they've created. And that also means that the news is what? Hawkish, good, positive, and we are looking for what? Bullish structure or bullish market, or we are looking to buy that. But that is basically what you need to know about NFP, right? I'm going to in the subsequent videos, we're going to talk about which apps you need, which sites you need to read all these news fundamentals. Like I said, this course is going to be well packed with fundamentals. So let's continue. Now, we have other interpretations or other terminologies that we use. For the USD, we normally call it the greenback. So if you see someone saying greenback in the market, know that the person means USD. If you see someone saying GBP or pounds, right? That means the person means cable. That's another term that we use for this. And another term that we use for NZD is the kiwi, right? Kiwi. So if you see someone say, I'm buying kiwi, I'm selling kiwi, that means the person basically means NZD. And if you see someone saying odd or Aussie, right, that means the person is saying that odd US. So if someone says I'm bullish on Aussie pairs, that means the person is bullish on odd pairs, pairs with odd. If there's someone says I'm bullish on Kiwi pairs, that means the person means that NZD USD, he is bullish on it. If you hear someone saying I'm bearish on GBP, that means, or I'm bearish on cable pairs, that means the person basically means he's bearish on what? GBP pairs. I hope that makes sense. Now let's talk about forms of trading. Forms of trading, we have two forms of trading. We have the technicals, right? Technicals and fundamentals, right? We have the technicals and fundamentals. Sorry for my handwriting. This is how doctors we do. Right. Now, so when we talk about technicals, basically we are going to be doing more of candlesticks, right? Things that you see on your trading view. We are going to talk about candlesticks. You are going to be doing more of indicators, right? Indicators. We are going to be doing more of price action, right? I'm going to explain everything in the subsequent video, so just follow through. We are going to be doing more of Fibonacci levels. I don't trade Fibonacci levels, but you are going to need it, you know. And we are going to also talk about pivot levels or pivot points. We're going to talk about Elliott waves, right? We're going to talk about chart patterns. That is market structure, right? Let me put it here, market structure, right? We're going to be doing that market structure. Now, when we talk about fundamentals, fundamentals basically means a news coming into the market. So fundamentals is grouped into two. We have the major fundamentals, the news that always come into the market. You know, if you like it or not, you're going to trade this news every time of the month, right? So there are four major news that always comes into the market, starting with the NFP that I talked about. You have the CPI, the FOMC, that's the Fed report, and we're going to have interest rate. These are the four major fundamentals that you're going to see, and I'm going to, on the subsequent videos, I'm going to talk about when you're going to trade them. For example, NFP, you're going to trade them every first Friday of every month, so you should be expecting that news to hit the market. And fundamentals is different from technicals, because fundamentals, whenever fundamentals comes into the market, technicals disappear, right? That is why I love fundamentals. And fundamentals, whenever there's a great move in the market, let's say when a news comes into the market and the news is bullish or the news is hawkish, you can get 100 pips, 200 pips, even 400 pips, 500 pips, 600 pips in the market in less than 5 minutes. You know, but technicals will never give you that kind of pips. We're going to talk about pips, pippets, and all those things, but technicals is not going to give you that kind of moves in the market in a short, you know, period of time. And we have the minor news. There are so many. There are currently 20 plus minor news in the market, right? There is the minor news that has high impact, there's a minor news that has medium impact, and there's a minor news that has small impact. We are going to talk about all those minor news. There's 20 plus news that we are going to talk about, and I'm going to break all of them down in the subsequent videos on this course. Now let's talk about currency pairs, right? Let's talk about currency pairs. Now, currency pairs, it's what Forex entails, right? So for stocks, you're not going to be doing currency pairs. For stocks, you're going to just be talking about the indexes and the major stock pairs that you know, like indexes of other countries, and minor pairs traded in that country. But this is currency pairs. That means you are going to focus on what? on just currency pairs. Now, Forex is traded with MT4 or MT5, right? You always want to download that on your phone, your tablet, your PC, whatsoever. So you just search MetaTrader. It's MetaTrader. Let me write it here. MetaTrader 4 or MetaTrader 5, right? MetaTrader 4 or MetaTrader 5, right? So you just need to download this anywhere on your Play Store, whatsoever, and that is what you are going to use to trade, right? Now, let's talk about currency pairs. There's a lot of examples of currency pairs, like what we said: Euro USD, Euro NZD, odd, USD, ZAR, CDs, Naira, all these things, we do trade them here. But now let's make an example. Normally you do see Forex traders talking about Euro USD. Why are they adding Euro and USD? Why are they adding both of them? Why are they adding USD JPY? Why are Forex traders adding, these two pairs together? Right now, this is what we do in the market, or this is what we do here. We do add these two stuffs together to form a pair, right? This is a currency, this is a currency. When they come together, it forms a pair, or it becomes a pair. This is a currency, this is a currency. When they come together, it becomes a pair. Now, this is the most important part that you need to notice, right? Now, the first pair always becomes what we call the base currency, right? This is the base currency, and this is what we call the quote currency. So this is the base currency. This is what the quote currency. Same thing as this. This becomes the base currency. This becomes what? The quote currency. Are you following? Yes. This becomes the base. The first pair always becomes the base. The second pair always becomes the quote currency. Now, one thing that you always also want to know is the base currency is always stronger than what? The quote currency. The base currency is always stronger than the quote currency. That means if, let's say, you are trading a news, right? Or even if you are trading technicals, right? The technicals or the fundamentals would depend on what is happening on this, the base currency, not the quote currency. The quote currency is kind of, a little power on the euro, on the base currency. So if, let's say, you are trading Euro USD and a news comes out on Euro, it's going to affect this pair, right? And it's going to affect the Euro. If you have USD, if we have a news on USD and you are trading Euro USD, it is not really going to affect Euro as much as it will affect USD. It will rather affect pairs like USD JPY, USD CHF, USD CAD, and all those things, right? So always look forward for what the base currency. Always know that the base currency is what is the strongest, and the quote is always the second currency is the weakest, right? I don't know if it makes sense. Now, when we talk about other examples or other pairs, you are going to get it. Now, let's do an example. Let's put odd USD here. Now, what is the base currency here? From what I thought, what is the base currency here? The base currency is what? The odd. So this becomes the base. The USD becomes what? The quote. Great. Now, the next question that you want to ask yourself, which is stronger, right? Which is stronger here? And like I said, the base is always stronger and the quote pair is always weaker. So if a news comes in the market, that means you are going to be looking for an alignment. If a news comes in odd, that means it's going to affect this market. It's going to affect what? The odd USD, but not the USD pairs. If there's going to be a news affecting USD, it will have less impact here, but will have more impact in pairs like USD JPY, USD CHF, and USD, blah, 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 USD CAD, and what to have you. For now, just know this, right? For now, just know this. That is why when there is crisis in US, it affects pairs like USD CHS, that's USD CDs, it affects USD ZAR. That means if the economy of US is struggling, it affects CDs, it affects ZAR in a way, right? But it doesn't really affect pairs that you can't have XXX USD in them, right? I don't know if I'm making sense, but I hope I'm making sense. So the next course, this brings us to the end of the first course. The next course, we are going to talk about how to take a trade, how to use signals, what is pips, what is pipet, all those commissions and all these things that you need to know as a beginner. We are going to talk about them. Then the following course, we are going to dive straight into technicals, talking about candlesticks, a full candlestick course. We're going to talk about trading view. After trading view, we talk about market structure, we talk about indicators, we talk about pivot points, we talk about chart patterns. Then after chart patterns, we dive straight into fundamentals, and how I do trade. So after fundamentals, we will be going deep into the masterclass courses, and we are going to be talking about how to now interpret the technicals and the fundamentals, adding them together, and how to trade them or how to use them to trade, right? So if you are going to be using fundamentals, like I said, there's two types of trading, right? Traders, and it's either you're a fundamental trader or you're a technical trader, or sometimes you use technicals and fundamentals together. I know some traders, whenever there's a fundamental news or whenever there's news in the market, they don't trade at all. I also know traders that also trade less of technicals, and they also go big on fundamentals. So you are going to know the kind of trader that you are going to be, especially when we dilute this course into helping if you're going to be a scalper or you're going to be a swing trader. We are going to talk about them in the next courses or in the next subsequent videos, right? So this is it. I hope you learned something today. See you guys on the next course of the STC. God bless you and stay blessed.